What is going on, everybody? Welcome back to another video here on the channel. For today's video, I'm back with another stock talk video, and for today's stock talk video, we're going to be talking about the TradeDesk, ticker symbol TTD. And if you guys are new here, don't forget to click the links down below to follow me on my TikTok and join my Discord server. Both of those links will be down in the description below. Okay, guys, so we're going to be talking about this stock because if you haven't heard already, this stock has been plummeting off of recent news with earnings, and they have an upcoming stock split, so we're going to be talking about why this stock is dramatically falling right now. We're also going to take a look back over the past year and notice why it's ran up so much and where we're trading right now, if this is a good deal or not for the future of the company. So let's jump right into this and talk about what we were doing in COVID timeframe, okay? So back in March during COVID, we were trading about $300 before the huge COVID crisis. We fell to about $150 before bouncing, and this stock right here is a COVID winner. This stock deals with software platform used by digital ad buyers to purchase data-driven digital advertisement campaigns across various platforms and services, okay? So this is definitely a COVID winner type of stock, and as you can see here by the chart, it definitely was. This stock ran from about $150 all the way up to $970 by the end of 2020. And basically throughout all of summer into 2020 and into about the fall, it was a strong mover and then took off towards the end of 2020 before having its pullback into 2021 with the overall market. And basically since 2021 and these previous highs, we haven't really got much going and we've been downtrending ever since. Now this is interesting here, okay? So a couple days ago we were trading, around 750 bucks. This morning, we plummeted, and we're currently trading at $485. But let's jump in and move in closer to see what actually happened. So this morning, we received, decent earnings. They weren't bad at all. They were pretty good. The stock actually popped off of that from 660, jumped up to 700 bucks before pulling back hard, okay? This stock had a 5-minute candle right here with a high of $700 and a low of $600. Huge move to the downside because of what the company said for their future outlook. So the company's guidance was not positive at all, and I'm going to read you word for word what the company said. Our business has been impacted by the COVID-19 pandemic that has significantly impacted advertiser demand. Like many companies that are ad funded, we are facing a period of higher uncertainty in our business outlook. We expect our performance could be impacted by issues beyond our control, such as changing economic conditions or additional shelter-in-place orders that may or may not occur. That is what the company stated. And wow, was that ever a negative catalyst? They were basically saying that they don't have any control about what is happening right now with the future of the outlook of the company and what they're expected to do. That is not good to be telling your investors, okay? That is not good news at all. And okay, they may not actually have much control over what could happen in the next several months to year. But that does not mean that you go out there and say something of that nature. That is a huge negative catalyst, and because of that, the company and investors took that as a big negativity towards the stock, and the stock fell because of it. There's obviously a lot going on with the economy right now, and this stock doesn't see themselves either progressing as quickly as they did throughout 2020, which is hard to compete against, but they said it in a very negative way. So, what happened to the stock? Well, the stock, like I said, fall. Throughout pre-market, it was diving. Throughout open, it nosedived all the way down. Now, it looked like we tried to consolidate for a little bit, started a downtrend again, and then we tried to hold this $500 mark, but completely fell down to the downside, broke to new lows around 483 bucks, tried to jump back up, but couldn't break over this blue SMA line, and now we're still trading downward. So, we have two things to look at, the short-term outlook and the long-term outlook. In the short-term outlook, we're going to wait for a consolidation period and a short-term reversal. I'd like to see this balance out somewhere around this $500 to $520 area, kind of consolidate over the next few days or maybe day or two, whatever it is, and start to show signs of reversal upward to the $550, $560 area. I think this is a great short-term opportunity if we can see signs of reversal. You see how fast this stock went down, it can do the exact same thing in a reversal to the upside. So I think in the short term, watch for it to consolidate out over the next couple trading sessions, and from there on, take a position when you start to see signs of life and a reversal. Make sure to have a stop loss and cut losses when need be. But also make sure to take gains up along the way, because who knows how quickly this can jump up or start to reverse again back to the downside. So playing this short term is going to be very risky, but at the same time, there's a lot of potential upside with this in the short term. We were trading at $750 just a couple days ago, and now we're trading sub $500. So let's wait in the short term for signs of a consolidation and then a reversal. Now for the long term, for those of you who are looking maybe a year or two down the road or even further out, I like this company. I like their business model and I like what they're doing. But yes, this was very big negative short-term catalyst. But that's good news news for long-term investors because this is a negative catalyst only in the short term. Do you really think that digital software platforms and digital advertisement campaigns are going away anytime soon? No, they're obviously not. I mean, yes, they may not be as strong as they were throughout 2020 because of the pandemic, but we're going to start to come out of this pandemic and realize that we're still going to be in a digital advertising age. And a company like the Trade Desk is going to be very, very important to have. So yes, looking at this company right now, it's not looking too well. We've been on a downtrend for the past couple months, and you know what? We haven't gotten out of this rut, and right now we're trading at sub $500 at a company that was trading at about $1,000 just a few months ago. But I like the long-term outlook of this stock, and I wanted to wait for a long-term consolidation then reversal. I think we're going to have a quick jump up to the upside and then we'll start to pull back down again. But I want to wait for that long-term consolidation and get in on it before this 10-for-1 stock split. So if you're interested in getting in on this stock before the 10-for-1 stock split, here's what you got to do. You got to be a shareholder before June 9th. So you have to purchase at least one share of the stock to receive those 10 shares before June 9th. The stock will start trading at the split adjusted price by June 17th. So June 9th, you have to have the stock in your portfolio by then, and then on June 17th, it will start trading at that adjusted price. So a 10-for-1 stock split right now would mean at $484, if you buy one share right now, once the price adjusts and we do go through the 10-for-1 stock split, we'll be trading at around $48. Which is a huge change in price for those who are looking to just buy shares after the stock split. For right now, if you get 10 shares and you're holding 10 shares at $48, I think that's a pretty decent deal. Especially based on where we're trading a couple sessions ago, we were trading at a much, much higher valuation. But again, I don't want to buy into something that's dying right now and that's still downtrending. So let's wait for a bottom before we jump into this stock. So once we find a bottom on this play, we'll take the position before June 9th. I want to get into it before then so we receive the stock split shares. And like I said, it may be choppy around that time frame. There's going to be a lot of buyers and sellers, and especially after a stock normally goes through a stock split, it tends to fall. But if you're looking long-term with the company, I think you're in a safe company at this valuation. And if you're looking long-term for the company, I think this is a solid company to be into for the long term. But it's going to be choppy over the next several weeks of trading, so just keep that in mind. Whether you're a short-term trader or a long-term trader, you're going to be waiting for a consolidation period and then signs reversal to the upside. And then from there on, you take your entry position and figure out where your exit position is from there. So guys, hopefully you guys enjoyed this video and learned something today. Let me know what you guys think about the Trade Desk down below. And if you're interested in my other content, don't forget to click my other social medias in the description below. Thank you guys so much for watching. I'll catch you guys in the next video. Peace out, everybody.